Welcome to the Transparent FX Academy. I'm Nick and I'm a top plotter in TradingView with over 190k reputation points. And in this video, we will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be analyzing the pair from a technical perspective, then we will go and see what we have when it comes to the order flow, so the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's jump straight to the charts. Okay, so let's speak about USDCAD. Now, starting here from the monthly, what we can see is that in all this impulse to the downside, there is one candle not related to the move. That candle is exactly the green one that we see here, showing that during this very strong move to the downside, the market did respect the zone, creating this green candle showing that at this level, we did have very strong support. Then the market broke it to the downside, and at that point, that previous support was turned resistance. And we can see how the market respected this level as resistance in multiple occasions. In fact, if we see here all the wicks that the market created at this zone, we can see that this is exactly the level that the market has been respecting and from which we just created this rejection to the downside. So here in the monthly, we're rejecting resistance and we do expect a potential drop lower. Going down on the weekly, what do we see? Now here on the weekly, we can see how we are currently testing previous weekly support, which is basically this move to the upside here, the wick that started this move to the upside, which now that the market has broken it to the downside is turned resistance here. Now, in general, if you have an impulse and you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how we have the 0.32 and 50% Fibonacci retracements, which currently are lining up exactly this area. And what we can expect is for the market to reject these levels to the downside for potential continuation lower. Going down on the daily, what do we see? Now here on the daily time frame, we can see even more confirmation. In fact, we can notice how in creating this move to the upside, the market has also printed this W formation. And in general, after the creation of a W, what you want to see is the market create a move to the downside to go and complete the pattern at the previous resistance turn support. So what we expect here is for the market to potentially provide a rejection even lower to go and complete the pattern at this previous resistance turn support. Now, if we go and see what we have when it comes to the commitment of traders, which is what the non-commercials, so the biggest speculators in the market are doing, so hedge funds, and we check the data for the CAD, we can see how lately net positions on the CAD have been decreasing. In fact, we went from having 17k to having 6k net positions. However, if we look at how that is happening, we can see how first we went from having a very positive net positioning to going negative, and now we are starting slowly to shift back to positive. What does it mean? It means that here we can see 18k longs getting closed, and now is already 2 reports in a row that we are starting to rebuild that long positioning, and at the same time we see hundreds and thousands of shorts getting closed, meaning that in the very short term we are seeing an increase of the strength of the CAD, and an increase of the strength of the CAD means weakness for USDCAD, which could easily provide this rejection to the downside and complete this W formation. So it seems like there is in fact a potential short-term shorting opportunity here back to the neckline of this W formation. So how we could be approaching this potential short-term shorting opportunity now? As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, we could be monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish environment as we have right now to an intraday bearish environment. And if the market would shift from an intraday bullish to bearish environment and provide to us one of our valid entries at that point, we would have good probabilities and good risk to reward for a potential move to the downside and completion at the neckline. Now, if you don't know what I'm speaking about when I say market, environment shift, and valid entries, that is all part of the mentorship program, which you can access now completely for free. The link, in fact, is in the description, and I really suggest that you go and check it out. Now, if you enjoyed this video, make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.